Because one of the things that has been, odd about the gold bull market that has been going on for a long time now is the fact that silver has not really participated. Because in most historic bull markets in gold, silver has not only participated, silver has led. When we've seen a big move up in gold, we've seen a bigger percentage move up in silver. Anyway, prior to getting the jobs number, we had a big breakout in silver. And I've been talking about this on this podcast. I've been telling people, buy silver, buy silver. I didn't think it was going to go below 30. I was saying $30 silver is like $2,000 gold. And, telling people to buy it, $32, $33, very little downside. I knew eventually it would break out. And on Thursday, it did in a big way. I think, we were up almost $2 at one point, or Friday rather. But silver not only broke out above 35, the same day it broke out above 35, it closed above 36. And as I'm watching prices live now on Sunday night, it's about 9:15 out on the East Coast. Silver's trading at 36.08, above 36 again. Gold initially was moving up with silver, and it got back above 3,400, but it actually sold off earlier in the morning, and then after the jobs numbers came out, it sold off more. And in fact, Thursday was the big move up in silver. Excuse me. It had a big move up Thursday, but then it moved up again because it didn't close. It added about 50 cents. Right. It had a big move up on Thursday, up about $1.50, and then it jumped another 50 cents. But silver stocks on Thursday, a lot of the silver stocks were up 9, 10, 11. I think the biggest one was a 15% gain in First Majestic. But other silver stocks were up, 9, 10%. Even the silver stocks mostly pulled back on Friday because I think the weakness in the gold market and the strength of the stock market caused selling in gold stocks, and even silver stocks pulled back. But the significance of the breakout, I think, is important. And I think one of the reasons that gold sold off, and it didn't get killed. I mean, gold's still about $3,300 an ounce. Right now it's $3,305. It's off about $5 in this early Asian trading. But I think one of the reasons for that was unwinding of spreads. And here, as I'm watching, silver's on the high of the night now. It's up a dime at 36.12. A lot of people have been trading spreads where they're long gold and short silver, right? Because that trade has been working. We were 100-1 in the gold-silver ratio. And I actually think that it wasn't just long gold, short silver. People were long gold, short platinum. I was talking on the last podcast that I did that people should buy platinum. I was looking at platinum, and it was still below $1,000 an ounce. The last time I talked about it, it was under $1,000 an ounce. And I said, this is ridiculous. You can buy more than 3 ounces of platinum with 1 ounce of gold. Well, last week, platinum broke out. It's almost at $1,200 an ounce right now. It's at $1,175 down, but it's up about 20% in a week. And not just platinum, palladium, which was also around 1,000, is now, now it's 1,067, not up as much, but still, this is a huge move up in the precious metals complex. So it's not just gold. The other precious metals are moving up too. And I think what's happening is these spreads where people are long gold but short silver are being unwound. People don't want to make that bet anymore because they see that the tide has turned and that silver is going to start to rally. And so they don't want to be short silver anymore. Now, maybe they don't want to be long gold either if they have to unwind that spread. They were simply trading the spread versus making a real directional bet because they might have thought, hey, gold prices could go down and silver prices will go down even more, right? So the spread traders may not have cared which direction gold and silver went. All they cared about was the difference between the two. But now, if it looks like silver is not going to underperform gold anymore, you're unwinding those trades. But I think that is very bullish for all of the precious metals, including gold, because one of the things that has been odd about the gold bull market that has been going on for a long time now is the fact that silver has not really participated. Because in most historic bull markets in gold, silver has not only participated, silver has led. When we've seen a big move up in gold, we've seen a bigger percentage move up in silver. We haven't seen that yet. And I've gone over the reasons why, the predominant one being that this has been a central bank-led gold rally, and the central banks don't buy silver. They just can't store it. It's not the monetary metal that they hold. It's more private investors that buy silver. Retail, small investors, even the bigger hedge funds are more likely to be active in gold and silver. So the man on the street has not been involved in this market for whatever reason. Either they've been sidetracked by Bitcoin, or they're just speculating in other tech stocks, or they're just not even bothered. They don't even feel the need to buy silver. They don't know anything about it. They don't think about it. And so you haven't had the rally that you typically had in a precious metals bull market. Well, if that's going to change now, if the breakout that we had last week signals that, okay, silver is finally joining the party, I think that's good news for the entire sector, including gold. I think gold will do better in an environment where silver is outperforming. So people will make more money percentage-wise on silver, but they'll make more in gold because silver is rising than if silver wasn't rising. Silver was, the weakness in silver was kind of a drag on the gold market. So imagine how much stronger gold would be now, how much higher the price would be if silver was going up. Because if silver was going up, that would mean the public was involved in the market, and they would also be buying gold. They wouldn't just be buying silver, because it's been the central bankers that have been buying gold, not the retail investors. That, I believe, is going to be starting. And gold just needs to, I think, close above 3,500, not just 3,400, but that would be a new high. Gold got close to 3,500 last time around. But this breakout in silver, the breakout in platinum is a bull market in precious metals. And it's not just precious metals, industrial metals. Inflation is reacting. And it's also having to do with the breakdown in the dollar, because the dollar index is still below 99. The euro is still above $1.14. So I think we're going to see a lot more downward pressure on the dollar and upward pressure on commodity prices, especially given what is now going on in Congress and with Elon Musk and Trump, which really is the biggest story. And I kind of maybe saved it for last because I think it is the most significant event. But it's also one of those things where I can say I told you so, because I did tell you so. And in fact, I told a lot of people this, a lot of my clients, because I had a lot of clients, and I mentioned this on this podcast, but I had a lot of clients that after Trump won the election, they closed their accounts. And the reason they did that is they said, Peter, look, I get, I've had money with you because I've been worried about the debt problem. I've been worried about the dollar, but I'm not worried anymore, because now Donald Trump is finally going to fix it. We've got Elon Musk, we got Doge, and we're finally going to be serious. Trump is serious. We're going to actually cut spending. We're going to cut trillions out of the deficit. The dollar's going to strengthen. We're going to have all this deregulation. Everyone's going to want to invest in America. And so this is not the time for your strategy. I don't want to be invested outside the dollar. I don't want to be in gold stocks, which, was a disastrous decision, because, gold stocks are up 50% this year. People that cashed out in November, December last year missed out on that. And of course, foreign stocks, while the U.S. market is down, you've got foreign, markets up 20%, 25%. So it was a horrible time to, bail out on my strategy. I mean, it was really the time to go all in on my strategy. But what I was telling people, and what I was telling people on my podcast was, look, I've seen this movie before, right? Many times, including with Trump, right? Not just Trump, but all the way going back to Ronald Reagan, when Ronald Reagan ran, and, he was going to clean out the waste, fraud, and abuse. They had the Grace Commission, right? A lot of fanfare with the Grace Commission. And they came up with all sorts of recommendations on how to cut waste, fraud, and abuse. But none of it was actually enacted by Congress. And I said that DOGE was going to meet a similar fate, that at the end of the day, you were not going to get any significant spending cuts passed by Congress. And I also talked about the layoffs. And I said, yeah, Donald Trump is talking about laying off federal workers. And I said he's going to find that you can't do that because they're protected by labor unions and other laws. And more of these layoffs are being thrown out in the courts. The courts are saying you can't do that. The president can't fire these people, right? So everything that I said was going to happen that was going to prevent any cuts in deficit spending has in fact happened. And what really shines a light on that is the big, beautiful bill that doesn't incorporate or codify any of the DOGE cuts into actual law that increases government spending. I've been saying this since the very beginning of the big, beautiful bill. I didn't wait for the House to pass it. I've been talking on this podcast, right, that the big, beautiful bill is big, but it ain't beautiful. It's ugly because it's not only full of pork, but that it preserves all the increased spending under Biden and grows it and throws tax cuts on top of that. You know, and I warned people, I said, look, Donald Trump already campaigned the first time on cutting the deficit, and he increased it. He didn't cut anything. He signed off on every unbalanced budget, every increase in the debt ceiling. And people said, well, he didn't have Elon Musk. Okay, he doesn't have Elon Musk anymore either. And I knew that Elon's efforts would fail. Not because I didn't have confidence in Elon, because I don't have confidence in Congress. And I didn't have confidence in Trump to have the political courage to do what needed to be done. And that is what's responsible for this fallout. Because I guess, you know, Elon Musk was there, you know, and, you know, he officially left, you know, the White House to go back to running his businesses. But while he was there, he worked very hard. And he was committed to, you know, changing the game, changing the trajectory of the country. He really wanted cuts in spending. And I believe that Elon Musk believed that Donald Trump wanted the same thing. Because I'm sure that as a candidate, Donald Trump told Elon Musk exactly what Elon Musk wanted to hear. You're my guy. You're going to come in. You're going to go through the government. We're going to get rid of all this waste, fraud, and abuse. We're going to save all this money. I'm with you. I want you on my team. We're going to do all this. I'm committed, because Donald Trump wanted Elon's support. He wanted Elon's money for the same reason he cozied up, you know, to the crypto community, right? He wanted all the Bitcoin money. He wanted their votes, right? He is a great politician, even though he just started, because he's a great salesman. You know, he's a great people person. From what I know, I've never met him, but the people that tell me that they've met Trump, you know, that they're taken aback by how nice he is, how important he makes them feel, you know, how you're the most important man in the room, how he you know, he even when he goes to a company, you know, he meets people, you know, and looks them in the eye and talks to them, and you know, he's a good schmoozer, right? He's great with people in person. And so I think that Elon believed a lot of the stuff that Trump was telling him. And so he went to Washington with these expectations. And when he got there, and, you know, Trump no longer needed Elon Musk, right? He's in the White House. He's the president. He can't run again. So he doesn't need Elon's support for re-election. And so Elon is not nearly as important to the president as he used to be, right? And so that dynamic probably changed. And Elon is there trying to get these cuts. And Trump is not cooperating. Trump is listening to his other advisors that don't want the cuts. Because again, and I pointed this out, all the money that's wasted, right? All the fraud, all the abuse, somebody benefits from that, right? It's not in the code by accident, right? All these wasteful programs are not there purely by chance. They're there because somebody wants them there.
Gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges, and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers, but physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics. It's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming, young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation. Silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.